So we had, maybe, like I said, 1 to 0 a year. So then in 2008 hits the Great Recession. We went from, probably in a 3 year span, we probably had 40 foreclosures, probably at least, maybe 50. I don't know. I'd have to count it. So at any given time, I was juggling 10 to 20 foreclosures at the same time. So they're not making their payments, number one. Some of them I'm fighting to get the properties foreclosed on. When I get the houses back, they're never in good shape. They always need money. So I got to figure out, put money into them. Got to figure out how to sell them. And then nobody's buying houses in 2008, 2009.
Before this episode begins, I wanted to let you guys know that the Started Somewhere apparel is officially live. In the description of this video, you'll see a link. It says Started Somewhere apparel. You can grab a hoodie, all colors, all sizes, t-shirts, long sleeves, and even coffee mugs. The hoodies are my favorite. They're super comfortable, true to size. They look good. They feel good. And if you do grab one, you'll be directly supporting me and you'll be supporting the show. So any money that I make from the apparel will go directly back into the show. And I'd really appreciate it if you do want to go that extra mile and show your appreciation for the content. You can do so by grabbing yourself a piece of clothing. Now, we're also live on Patreon. Okay, now I have plans here in the very near future to put exclusive content, exclusive only content on the Patreon. The Patreon is just $5 a month. It's also in the description. And if you do want to show your support and get access to that exclusive interview content, we have some amazing guests coming out in the near future. And I'm going to be recording some private segments exclusively for Patreon members. You can also subscribe and show your support that way. And the last thing, before we get into the episode, I've realized after looking over the analytics that we have a lot of people that watch these episodes. They tune in each and every single week, and they're not subscribed to the channel. Check down below right now. Are you subscribed? If you're not, please consider subscribing. It really helps us out. It helps me out. I have a goal of hitting 1,000 subscribers before the end of the year. Can you help me do that? If you can, I'd really appreciate it. Drop a comment. Let me know if you did subscribe. Hit that like button. And of course, enjoy today's episode. All right, Darel, welcome to the show, man.
Thank you, my friend. Good to see you.
You too, brother. You too. How's your day going, man?
It's going good. Recovering after the long holiday weekend, but all good things. We have a short week, but everything's going well.
What'd you do on the weekend, man? Anything fun?
What did I do this weekend? I didn't do too much. I was at home most of the time. I just got back from hunting last week, so I took a few days off midweek, so I stayed home over the weekend.
Nice, man. I see for the YouTube watchers, you got something on the wall there.
Yeah, I'm a big hunter, so my office is full of all kinds of dead animals.
Nice, man. What'd you go hunting for? What season is it right now?
So dove season just kicked off on September 1st. That kind of kicks off all the hunting. So I went last Tuesday, Wednesday, and hunted doves with my son. And I'm going back again this weekend. And then I'm going on a mule deer hunt actually in Colorado next week. So once hunting season starts, I'm always traveling somewhere.
Nice, man. Have you always been into that, or?
I didn't. Most people that you meet that hunt grew up with it. Their dad hunted, and their grandfather, and so forth. So I didn't start hunting until I was probably about 40, 41, which is I'm 50 now. I just turned 50. So about 10 years ago, some buddies took me on a dove hunt because, growing up in Texas, everybody hunts. And I was like, what the hell is this about? You take me hunting. I want to see what you guys are so crazy about. And so they took me dove hunting about 10 years ago, and I just fell in love with it. So I got a late start, but I'm gaining ground.
Cool, man. Sounds like an interesting hobby.
Yeah, it is.
Keeps you busy, right? Have you ever, I know you said Colorado, you're going hunting out there. Have you ever hunted in like the really cold weather?
I've hunted in Oregon several times, done some elk hunting and deer hunting up there. Not like Alaska cold or anything like that, but gone fishing in Alaska, but I haven't hunted there yet. But I'd love to do that. That'd be cool.
Yeah, man. Well, dude, it's a pleasure to have you here on the show. I know you've been up to some big things, man. I think we're mutually connected down in the Texas real estate market. But for the
Yeah.
listeners and viewers all over the world, would you mind to give us a brief overview of what you're all about and what you currently do?
Sure. So, I mean, right now I own a mortgage company called Noble Mortgage and Investments. That's pretty much what I've done my entire career. I started in the mortgage industry in 1996, right out of college, pretty much. Started my own company in 2003, and right now we have offices in both Houston and Dallas, and so that's what keeps my daily focus. We're hoping to have an office in San Antonio next year. So that's the goal right now. But just been working on that business, And I buy rental houses sometimes. I'm not a guy that's going to be flipping houses, but I'll buy and hold as well, and probably start building that up again here pretty soon.
Awesome, man. So tell us about the mortgage business that you're in. What type of loans do you focus on in your business?
So I do just about any type of loan. I specialize in hard money lending, and for those of you that don't know what hard money lending is, it's a asset-based loan that's built for real estate investors. So we loan to, these guys that say we buy ugly houses. So those types of lenders, most long-term lenders don't like, anything that has to do with the construction aspect of it, or they need draws and so forth. So we specialize on those loans, on those short-term loans, help them buy and fix, and then either resell or keep as a rental. So that's one type of loan that I do, but that's what we're most known for. But we also do regular 30-year conventional mortgages, first-time home buyers, FHA. I also do a lot of commercial lending. So anything that has to do with residential commercial lending in the Texas market, we'll consider.
So you're the guy. You're the money guy.
That's me.
That's awesome, man. Definitely an interesting business. In the investing world, investors need access to funds to buy real estate, of course, right? And companies like yours, offer some really great products that investors can utilize. I personally feel that more people would actually get into the business and invest if they knew how accessible money actually was.
Well, real estate is very capital intensive. It takes a lot of money to buy real estate. Anybody that owns a lot of real estate, that's not their own money. They're borrowing money either from family, friends, banks, lenders like me. They're putting together funds. I mean, you have to have access to money, and you're right, but you have to understand how it works. And so I spend a lot of my time, I own a company, and I'm not involved in the day-to-day stuff as much as I used to be, but I like to spend a lot of my time educating investors, because I always tell everybody, look, it's easy to borrow money, but you got to know how, and you got to know which angle to take it on. You look at a deal and you're like, should I go to hard money on this? Should I go to a bank? You got to understand it. So I spend a lot of time teaching. I do classes, webinars now because of COVID-19, but we used to always have big events and so forth where we would teach people, okay, here's a deal. What do you do with this? How do you put this deal together? Because the hard part is finding the deal. The easy part should be getting the money and getting, insurance and all the other stuff. So but you have to understand it. And it's surprising how many people don't. Like you said, there'd probably be a lot more people investing if they knew how readily available capital is, because it is readily available.
Right. And I see comments all the time on social media when somebody posts up a deal. TikTok is the newest thing right now where everyone's promoting their businesses and whatnot. And
yeah, I saw your twerking video you did on there. That was
pretty cool. Dude, don't tell them about that, man. They don't know about that.
That's your other page.
Hey, sorry. That's my alter ego, man. Come on. But I saw somebody post up like an 8-unit deal that they bought for $500K, and all the comments, thousands of comments. Oh yeah, it'd be easy if I had $500K, or yeah, it'd be nice to just have $500K in the bank. And it's these comments, these limiting beliefs that prevent people from getting into the industry. So I'm curious to know your thoughts. Let's say I found a $500,000 building tomorrow, right? It's a multifamily building, and I want to buy it. What would be the process for me to go through a company like yours to be able to pay for that?
So we always start with, what the property is. Is it already cash flowing? Is it, 80, 90% occupied, or is it, 50% occupied? So, this is kind of the process you have to go through to determine what type of money you can borrow. If it's a property that's already cash flowing and 80, 90% occupied, you can just go to a regular traditional bank or commercial lender. They're going to have you put probably 20, 25% down, but that's how you would finance that. That's the best source. Now, if you're buying a property that maybe needs to be repositioned, or the vacancies are low, or it needs a lot of work, so a traditional commercial bank doesn't want to touch that type of stuff. So you have to go through either a private lender, who is just like an individual who loans their own money, or someone like me that's a hard money lender. So a hard money lender will make you a loan based on not just what you're buying today, but what that property is going to be worth after you reposition it or raise the rents or get it occupied to a certain level. And so you have a lot more leverage that way. You can leverage yourself very, very highly using hard money, sometimes as much as 100%, where you don't have any money in the deal if you have a good enough deal.
Right. And hard money lenders obviously are taking more risk. And because of that, the interest rates are going to be higher to make it worth your while. Is that right?
Yeah, they're taking more risk in the fact that it's a fixer-upper type of property. So, the risk in this business is from the time that the property is purchased to the time the property is completed, because a lot of things can go wrong in construction. So there's one aspect of risk. The other aspect is leverage. If you're giving someone 100% of the money, that's a lot of risk for that lender to take on. So yeah, you are going to be expected to pay higher rates of interest and points as well. And then also these loans are short term. These commercial lenders and banks, they're making 30-year loans or 5-year loans. They're getting interest for a long period of time, whereas a hard money lender may only have a loan out for 6 months to a year. So we're getting a shorter amount of time that we're in that loan, because typically the borrower wants to get out of it as soon as possible because it's a higher rate.
Now, Darel, do you take into account somebody's experience when borrowing money from you on the hard money side, or is that not a thing?
Yeah, it is. I mean, it depends on what they're doing. If let's say they're flipping a house and they're buying a house that's halfway burned down, that's not an easy house to take on for your first deal. So, we would want somebody that has some experience, someone like a Brant Phillips, you mentioned him earlier. He's been in the business for a long time. He's rehabbed a lot of houses, flipped a lot of houses. And so, a house that's halfway burned down to a guy like him, it's not that big of a deal. He's already seen it. But someone on their first deal, no experience, we would want to make sure, not saying that we wouldn't do the deal, but we want to make sure that they have the right contractors in place, someone who can take care of it from soup to nuts, because there's a lot of pitfalls you can run into in that type of deal.
And also, how important is one's personal financial history, like credit, income, things like that, when borrowing hard money?
Well, we always start off with exit strategy. So when you come to us for a loan, on a hard money loan, we're going to say, okay, what do you plan on doing with this property? If you plan on flipping it, that's one exit strategy. If you plan on keeping it as a rental, that's another. So if you plan on flipping it, that means we're going to get paid off when you sell the property. So I'm still going to pull your credit. We're still going to look at how much money you have at the bank, because you have to have capital, to make payments and handle contractor draws in the meantime. So we're going to look at those two things. We don't have a minimum credit score, but if your credit score is very, very low, then we might limit your loan to value. You may not get 100% financing. However, if you tell us, okay, I want to keep this property long term, so that means I'm going to get paid off by another lender. So we have to find another lender willing to finance you long term. So now it's a whole new thing. Now I need to look at, you have to have a certain credit score, you have to have income, you have to have cash in the bank. So I need to know what that other lender is going to look at in order for me to make a short-term loan, because I don't want to make a loan if I can't get paid off.
Right, and that makes complete sense too, because if you issue a short-term loan and the person's not credit worthy to get a long-term loan, well, then you're probably going to be stuck having to foreclose on the property or something else. Another exit strategy.
If you get out of the loan, then yeah. I mean,
Yeah.
we offer extensions to a certain point, but at a certain point, our money is made to be short term. So
Right.
we're like, you need to pay us
That
off.
makes a lot of sense.
So we don't like to put them in a position. We don't want any foreclosures. We hate foreclosures, and that's not the business we're in. We're in the business of loaning money and getting paid back. If a foreclosure happens, that's the worst case scenario. So we try to avoid that by looking at it up front. How do we make sure you get out of this safely?
Right. Now, Darel, the show started somewhere, right? I know you weren't born in the mortgage business.
No.
Or maybe you were. But,
No.
okay. So, Darel, if we could, man, let's go back in time. First off, where'd you grow up?
I grew up in Sugar Land, Texas.
Sugar Land, Texas.
Yeah.
I love Sugar Land, Texas, man.
Yeah, it's a good city.
Big old Sweetwater Boulevard, man.
Yeah, that's where my high school was. I went to Clements out there.
Nice, brother. So Sugar Land, Texas. Grew up. What kind of childhood and upbringing did you have, man?
My father's an immigrant. My father's Middle Eastern. My mother was a Midwest woman. They met in college in Indiana, and so having a father that's from another country is certainly different. Different upbringing than a lot of people have. But my father was probably lower middle class. We didn't have anything that we had everything we needed, but we didn't have all the luxuries. So I was never really exposed to the finer things in life, if you will. Until I got out of high school and started, I was in college and I got a job at a restaurant. And it was a very, very, I worked at a couple restaurants first, but then I got a job at this really like hip, like seen and be seen, all the pretty people went to. And I was just blown away, Ross. I was like, who the hell are these people? I'm like, I want to be sitting down here at this table and not waiting tables on these people one day. The parking lot was full of Porsches, Ferraris, Lamborghinis. And I'm like, okay, so that kind of was my first exposure to, to inspire me to like, I need to figure out how to make money. So I got exposed to that, went to college, graduated. My first job was working for stockbrokers, which I didn't do well at, and I didn't enjoy it. I was there for about 6 months. And then I just fell into a loan officer job at a hard money company. And, I just really took to it. It became very naturally to me. I always tell people I felt like Mozart on the piano. They put Mozart in front of the piano. He just knew how to play. Well, I just knew how to do loans. I had real good instincts with it. So I worked for that company for about 2-3 years, went to one other company for another 2-3 years, and then went off on my own in 2003. And, the rest is history, as they say, right?
So, first off, it sounds like you read my book, man. I don't know if you're trying to impersonate my story, but I used to work at a restaurant, man, and the same thing. I worked in City Center at the Yard House in City Center.
Oh yeah, I love Yard House. I just took there last week.
Nice, man. I used to work there, and same thing. When you walk up to City Center, right there outside the hotel, there's always Lambos and Rolls Royces.
Yeah,
I'd be walking in with my uniform, man. Last night's ketchup stains, like, you gotta be kidding me. It's Friday. These people are gonna have a great night, and I'm here working till 3 a.m.
Yep.
I got so pissed. And, that's what got me. Right? It's a motivator, right? It's a huge motivator.
Yeah, I hated going to work when everybody else was going out.
Oh, that's the worst.
I was like, I'm going to work, and everybody's like, thank God I'm done with work. And I'm like, I'm like on the opposite schedule of everybody else. And, it was a great experience. When you're in college, you can't ask for better money when you're, going to college and working at the same time. Because I lived on my own since the time I graduated high school and moved out on my own. But you see it and you're like, God, I don't want to be doing this. I want to be sitting down right here at 5 o'clock at happy hour instead of showing up to work, like you said, with stains. And
I know. And the worst part is in the restaurant industry, you got to work nights if you want to make money.
Oh yeah, absolutely.
The lunch people, they don't make as much. So it's like one of those things, and forget getting a weekend off, man. You miss one weekend, that's, half your monthly income right there.
Yep. You got to put the time in. You got to put the time in. And you're working late, you're getting out at 11, 12 at night. And then, so you're right. It's good money. It's easy to get addicted to that easy cash money. But eventually you want to graduate from that and be on the other side of the table.
Of course. Absolutely. Yeah, I recommend it for people that are looking to make a transition and want some more freedom to build a business, bartender, serve tables at night, make some cash, and then build your business during the day.
Oh, yeah. I did that when I first got out of college. I continued working because my first job was 100% commission. I didn't do, very well at all. And then when I got a job in the mortgage business as a loan officer, I still kept my bartending job because I was like, I needed to get to I was 100% commission again. And so I waited until finally I had some regular money coming in. And then I was like, finally I was able to quit, which it was such a good feeling being able to finally get out of it.
I know. I can relate, man. So, Darel, what did you study in college?
So I double majored in finance and marketing. I started off as an accounting major, and then I'm really good with numbers. I'm a math person, but accounting just really bored me to death. And so I started up pursuing finance, and then I had to take a couple marketing classes. And so that was kind of interesting to me as well. So I decided to double major, which I'm glad I did because they both work hand in hand when you own a business. You have to understand the finance side, but you also have to understand the marketing side. They're both very, very different, but they're both key to your businesses. So it helped me a lot in growing my business.
Now, do you think that you'd be able to do what you do now without your degrees?
Yeah, absolutely. I don't think a degree is necessary in this day and age unless you're pursuing something very specialized like engineering or you're going to be a doctor or something like that. Unless you're running into something that you need licensing, which I did have to be licensed, but I think you can still get a mortgage license without having a college degree. But I think it sets a good foundation. The finance side and the marketing side, being exposed to that on the collegiate level, definitely gave me an advantage. Do I think I could have figured it out without it? Yeah, I think it would have been a longer learning curve though, but it certainly helped me out. But a lot of it is more conceptual. It's not like real world stuff. It's more conceptual, but it did give me a good foundation.
Now, did you pay out of pocket for school, or did you take scholarship or loans, or?
Now, I was lucky that my parents did pay for my college. Once I graduated high school, I moved out, but they did pay for all my college. I think I had one loan that I got, but I didn't leave college with a bunch of college debt. That would be more difficult to deal with, I imagine.
Right. Yeah. No. Absolutely. A lot of students, people that graduate, are dealing with a heavy burden of college debt. You
Yeah,
know.
they are. It's crazy, and college is expensive. My son is at A&M right now, and let me tell you, it's not fun writing those checks.
Hey, well, it's a good thing you made it to the other side of the table
I
because
know.
bartender probably wouldn't be able to cover that, man.
No, not at all.
So you attended college, you graduate with double major, and when you graduated, did you have an idea of like, okay, this is what I'm gonna go and do, this is the jobs I'm gonna apply for? Like, what kind of ambition did you have at the time?
I wanted to make money. What's funny is I wanted a job where I had unlimited potential. So I wanted 100% commission job where, whatever I made was on me. And what's funny about that is now owning a business and I'm, typically hiring a younger generation, they hate the word commission. They're scared of the word commission. And I'm like, what are you talking about? I was scared of the word salary when I was their age. Like, don't tell me how much you're going to pay me. Let me earn my money. And so I wanted a commission job. So I did get a commission job. I worked for a brokerage, selling mortgage-backed securities, stocks and bonds, all that kind of stuff. And it was just cold calling, every day, all day. It wasn't for me. I didn't make any money. And so I did that for about 6, 8 months. And then a friend of mine who was working at a mortgage company was telling me that they needed more loan officers. So I was like, you know what, fine, let me try this out because this is not working out. And it was a company similar to mine. They did hard money loans. They did some regular conventional loans, but they had some loan officers there and they did some advertising. So it really enabled me to blossom because I was 100% commission. Whatever I made was me. If I want to make more money, I worked harder. And so I busted my ass early and often in my career, stayed late. Everybody else got off at 5. They'd leave for the day. I'd get off at 5. I'd go get a snack and a cup of coffee. I'd come back and work till 8 o'clock because I figured people at home are easier to get a hold of than people during the day when they're at work. So I really worked hard building my book of business those first few years, and it paid off.
Now, what was the motivator for you to work later and grind and really put in that hustle? Like, did you have an idea of what you wanted your lifestyle to look like, places you wanted to go? Like, what was the real motivator behind all that?
Again, I think, that working at that first really nice restaurant really inspired me. I'm like, I want to drive a nice car. I want to, and working at that restaurant, they made us learn the food. They made us learn the wine. So then at that point I had grown into having really good taste. I'm like, if I'm going to be able to eat this and drink these wines that I love and drive that car that guy's driving, then
You want to be rich.
yeah, I need to make good money, and I got married young and so I wanted to obviously provide a good life for my wife and then hopefully build a family one day and all that. So, I figure if you're going to be working every day, like everybody works full time, you might as well make money doing it, right? Make good money doing it.
Absolutely, man. So you got into the loan officer space, right? Took a job and eventually, well, now you're the owner of Normal Mortgage, right? So,
Yep.
like, what did that transition look like from being a loan officer for someone else at another company to starting your own company?
I thought I was very green starting my business. I really didn't think it would be that much different because I had this mentality that, I'm 100% commission. I have to do everything anyway. They're not paying me anything. So I might as well just do this myself. So I already had a good following and a good book of business. So, I basically just subleased some office space from somebody I knew and said, I'll just start my own company. So I was just thinking, I'm just going to be doing the same thing I was doing before. But what I didn't realize is, to build a company, you're not only the loan officer that's 100% commission, you're the HR person, you're the accountant, you're the finance guy, you're the marketing person. So I had to learn to do all these other things And then if you have time, you still have to go do loans, right? But obviously you have to do loans the whole time. So you have to wear a lot of hats as a business owner, especially early on before you're able to even hire anybody. I didn't even hire anybody for the first probably 6, 8 months. And so I was, putting my hands in all these different jobs that I wasn't used to doing. So it's not easy at first, but eventually I got a handle on it. And so for the first several years, I was just doing way too many things. I was doing the accounting, I was doing loans, I was doing this, and that. So I finally learned eventually how to delegate those things and hire the right people for it.
Mm. And let's talk about the process. So, because a lot of people are interested in like, okay, we get it, we get that you did it, but let's talk about like the actual process. So you come to yourself in your head and you're like, you know what, I'm gonna start a business. What's the first thing that you do?
Well, the first thing I did was form an LLC. Started my
LLC.
Come up with a name, come up with a logo. Start thinking of how you want the company to look, what you're going to be offering, how you're going to compete in that market. And for me, that was an easy transition because I was already in that market doing those loans. I worked for a hard money company that they had their own money, but I didn't have my own money. So then I had to start raising capital as well. But, there's a lot of things you have to do. You got to think of your name. You got to think of your logo. You got to come up with an LLC, hire an attorney to do that, find office space, and, kind of the logistics of it. And then you have to figure out what it is you're going to be offering. But I already knew what I was offering because I was already doing it. So it was a pretty easy transition. It didn't cost me a lot of money to get started. When you open a mortgage company, at least at the time, there was no licensing required. So it was just pretty much like, okay, I'm open for business. And I just kept calling on the same customers that I was already calling on. So it was an easy transition for me. Now, as we go through that process and I start hiring people, that's when it started to get a lot more complicated.
Mm. So I assume there was no non-compete clause or anything in place from the company that you're working for? Like,
no. Yeah, no, I didn't have a non-compete with either company that I worked for. So that made it a lot easier. Now, if I did have a non-compete, that certainly would have been a lot more difficult because then I'd have to figure out something to do during that period.
Right. Yeah, then those non-competes are scary, man. Like,
yeah,
some of them are like 5 years, 10 years. Like, you can't do business with any of our customers, any of our resources. You can't use it. Like, whoa.
Yeah, I'm not a big believer in non-competes. I don't make my employees sign non-competes. I do believe in non-solicits, which means, okay, if you want to go, stay in the same business or even start your own company, that's fine, but you got to keep my customers out of it. I think that's the right thing to do. But I don't want to ever tell anybody how they can make a living. But I'm just saying, look, you can go do your thing, stay in the same field, but just you can't touch any of the customers that you formed here at the company because those are property.
Mm-hmm.
That's your property. That's all you have is in the service business is your customers.
And that's a fair play, right? Especially if they're employed for you at the time when they're making those connections. I mean, that's just, it's your company's market.
My business runs is I advertise like crazy. So these are not, contacts that my loan officers, for the most part, came up with by, beating the streets and going out and taking people to dinners and all that kind of stuff. I mean, I advertise like crazy. The phones ring every day. Emails come in every day. I provide leads to them through everybody I know every day. So these are all generated by the company. So I think it's fair.
Mm-hmm. Absolutely. So you start the LLC, you put it all together, kitchen table style. This is what it's going to look like. This is going to be the menu of products and services and all that good stuff. You said you found an office and you subleased it. Or what did that look like? Was it a big space, small space?
No, I had like one office. I had like this guy that I knew. He was a hard money lender, and I used to broker loans to him. And so he had some extra space, and I told him I was starting a company. And I noticed he had this extra space. It was like a big, long office where you could actually put like 2 desks in there. And I asked him, I said, would you consider subleasing that space? And he said, yeah. So I subleased that space, and I just worked out of that office and started doing loans right away. I would bring him all kinds of loans. I was able to get a line of credit to start my hard money business. It was a small line of credit, but I was able to at least do that. And I still did conventional loans. So I just kind of started chipping away little by little. So eventually I got to a point where I could hire someone. I hired an assistant maybe 6-8 months into it. And so that's kind of where that started. But it was really just me at first trying to figure everything out. I didn't know how to do all the accounting. I had to hire someone to help me figure that out. I mean, it's a lot to take on, but it's very doable. You just have to be You have to work your ass off at first and learn different sides of the business, learn how to do the marketing, learn how to do accounting, and what you can't do, you sub out. But a lot of it, when you're early on, you're not making a lot of money yet, so you kind of have to do it yourself.
Right. And at the time, when starting any business, there's usually fear, right? Like afraid of failure. Like, what if this doesn't work out? Like, what am I gonna do? Did you experience any of that?
Oh yeah, absolutely. I mean, in 2003, I had one son he was born in 2001, so he wasn't even two yet. My wife was working at the time, but so I had to venture off and start a company at a time when I was, really early in my career, when I had a little baby at home, and we were planning on having another one. So certainly intimidating, but I had confidence because I knew how to do what I wanted to do. Like I knew the mortgage business. And so I knew how to generate loans. I knew I could get loans. I just had to figure out how to build the business. And so I wasn't that intimidated by that process because I'd already been in that field for, 6, 7, 8 years.
Mm. And how long did it take you from opening your doors to making your first profit?
Profit or sale?
Both. So sale and profit.
I probably closed my first loan within 30 days, I'm sure, of starting my company because I had, again, I had contacts in the business. And I was profitable my first year. No question. I started in March of 2003, and we booked a profit that year. So, I had very little overhead though. I didn't had very low office expenses because I subleased. So my only expense was, paying for my office and whatever advertising and marketing I did, which I did very, very little. I relied on my contacts and more guerrilla type marketing where you're getting out there and beating the streets and knocking on doors and stuff like that. So I was able to keep my overhead very, very low and still make a profit the first year, which is nice, because not having to like build a lot of inventory and spend a lot of money on capital expenditures. I didn't have to do any of that. I had to buy a little bit of office equipment. That was about it.
Would you recommend somebody that wants to start a business tomorrow? Like they're sure shot. They're like, this is what I want to do. This is how I'm going to do it. Would you recommend that person has some cash reserves in the bank in case they don't turn a profit in their first year?
Yeah. You have to have money in the bank. And I had money in the bank, so I was able to sustain myself for a little while if I didn't make a profit. But, cash reserves are everything. I don't care what you're doing. I don't care what market you're in, what you're trying to build a business. We're in a recession, we're not in a recession. Cash reserves are everything. That's what gives you staying power. But if you're starting a business, you have to expect the unexpected. You don't know what's going to come at you. So certainly having cash reserves helps a long ways. If you're not able to, build a profitable business in the first 12 months, you got to be able to last. So you need to be able to forecast that. How long is it going to take me to build a profit?
So what you're saying is that the listeners shouldn't just up and quit their job today and then start a business tomorrow without any cash reserves.
It's tough, unless you have investors that are backing you. Maybe have someone who can partner with you, and you give them but then you're giving them a piece of your equity. I didn't want to do that. I've had so many people offer to partner with me over the years, but I never wanted to do that. Partnerships scare me. Partnerships start normally on the right foot, but if you guys don't have the same vision, or at one point somebody changes the vision of what they want, and then that can cause a big problem with the company. So you can bring on partners if you don't have any money. Just make sure that your vision is aligned, because you may be wanting to go this way and the other one wanting to go this way, and then all of a sudden you have this big disagreement. The whole company could go under at that point.
That's a great point. That's a great point. So you like to maintain total control.
I like 100% control. Yeah, if the ship's going to go down, it's going to be on me. And I like that feeling. I don't want have to go get approval from anybody. And that's really why I started my own company. I'm like, what, I'm going to do it my way. I want to have to answer anybody. If I make it, I make it. If I don't, I got no one else to blame. If I make good money, that's on me. If I don't make good money, that's on me. Like I want that on my back. So when you have a partner, it's like maybe you have a great idea and he's like, nah, I don't want to do that. And maybe it could have been a good idea and he doesn't want to do it. And you're like, so you just don't have a lot of maneuverability. When you own your own business, you own 100% of it. You make all the decisions, and so you're able to move very, very rapidly and make decisions very, very rapidly without having a committee and have people mull it over and think it over. You know, you can gather your information, make the decision, and move on.
But at the same time, do you feel like that might limit a company's growth or skill sets at some in some circumstances?
Yeah, absolutely. You know what helped me a lot, Ross? You know, my first from 2003, you know, we did really well the first 5 years, and then the Great Recession hit. You probably weren't even in the mortgage business at that point, but the Great Recession hit, and I mean, not in the real estate business, hit in 2008 and 2009. And so I went from having a company of probably 15 people down to 2 people at one time, myself and one other person, because there was no business to be had in real estate at that point. As far as like making loans, it was very, very difficult. You know, uh, 8 out of 10 of my competitors went out of business. So it was a very, very difficult time. And so, you know, that enabled me getting out of that. I had to figure out how to rebuild my business again. And one of the smartest things I did after we came out of that Great Recession was I hired a business coach. And so my business coach really helped me expand my business and helped me figure out how to run the business as opposed to being in it so much. So, you know, for the first 5 or 6 years, like again, I told you early on, I was doing everything. I would literally did all my accounting. I did all of my marketing. I still made loans myself. I did all the HR. I did all the IT stuff for all my employees. Like I did everything. I would go out and look at every house we did a loan on. And so when I met with my business coach, he was like, "What are you doing? Why are you doing all this? Why don't you hire an accountant?" I said, "Well, I know how to do it myself." He's like, "Well, how much you got to pay an accountant?" I was like, "I don't know, 50, 60,000 a year." He goes, "You make more than that. Why are you doing that job?" And I'm like, "I don't know. I'm good at it." He's like, quit doing that. What else are you doing? So he started helping me like, get rid of this, get rid of this, get rid of this. So then I can focus on building the business, you know, work on my business. You heard that, but work on your business, not in your business. And so that he really helped me get out of my own head when it came to that stuff. But I was such a control freak, you know, especially about the accounting side. I liked doing the accounting because I knew where every penny was every single night, you know. And so now I've released all that, and I don't do all those, you know, tedious type work. I have a staff that does that. I still meet with them, so I figure out where everything's going, but I don't do it myself. That really helped expand my business quite a bit.
Yeah, that's powerful, Darel, honestly, man, because a lot of people are afraid to hand away certain tasks when it comes to their business. Maybe it's they don't trust that someone else can do the job as good as they can. You know?
They can't. And they can't. Let me tell you something. It's called the Superman complex. You think you can do the job better than everybody else. But I'm here to tell you, as a business owner, you can do it better than everybody else because it's your business. Of course, you're going to be more passionate about it, more diligent about it. But you can find good people that do it maybe almost as good as what you did it, because you're going to lose some quality by handing off those tasks. But you have to get comfortable with that. And that took me a while. And so eventually I got to the point where I handed it off, but I was still very involved in it. Okay, you got to do it this way. You got to do it this way. And at some point you get comfortable with the idea, because it's never going to be as good as when you did it yourself, because you're the business owner, you know. No one's can't expect them to be as passionate about it as you are.
Yeah, no one's going to truly care about your business as much as you do. Like it's your baby.
No, that's exactly right. You built it with blood, sweat, and tears. You were there from day one. I hired really good people. I did get really good at hiring people, and I love my team. I hire people that are passionate, that work here. They drink the Kool-Aid, if you will, but they're still not going to be as passionate as I am. But I do have 100% trust in them. I mean, my employees know everything about me. They know all my social security numbers. They get into my bank accounts. I mean, they could destroy me overnight if they wanted to. But I hire the right people.
Right.
He is hiring the right people.
And how many staff do you have right now working for your company?
Right now, we got a total of 12.
12 people in office or virtual?
It's kind of back and forth. All of my admin are in the office on a day-to-day basis. My loan officers are originators. It depends on the loan officer. A couple of them come in every day. Some of them work maybe 3 days in and 3 days out of the house. So we've kind of been toying with it. And when COVID-19 hit, when lockdown hit, I allowed all my loan officers to work remotely. And then when it started easing up, I started bringing them back in, because I found, not everybody can work from home. It's not easy. Like I couldn't do it. I'm not nearly as productive working out of the house. So luckily my business is considered an essential business. So we're able to continue to come in. But even some of my loan officers, some of them, I saw their production really slip off when they were working out of the house. I have one loan officer who works better at home than he did in the office, which is funny. I'm like, all right, he's the only guy that's allowed to stay home every day. All the other guys can get your asses up here, get back to work, Put your mask on, do what you got to do, wash your hands, but we gotta work.
Yeah, yeah. A lot of companies, man, are choosing to just continue the work from home thing because they
Yeah.
feel they can reduce office space, which is going to reduce cost of expenses, of course. But
Yeah.
yeah, I mean that's the thing, right? It's like, are you really going to be as productive from home versus being around and having that camaraderie in the office?
Yeah, I mean, some people can do it, and some companies have been successful. I know people that their whole business right now is gone remote, and they said they're just as productive as they were before. So I think it depends on the company, also depends on the individual. Me personally, I have to come to the office. I can't work out of the house. I feel like if I'm working out of my house, which I've done that before, I feel like I'm always at work. And so I don't know. I need like that
You
separation.
need that break. I can't
Yeah.
work from home either, bro. Because I'll turn on the old Xbox and,
Yeah.
and I'll sit and play video games for 3 hours and be like, "Holy, I got nothing done today." I can't do it. I
Yeah,
can't.
I just worked the whole time. When we got hit with Hurricane Ike back in 2009, I worked out of my house for about 3 months because our building was damaged. And I would come downstairs and have dinner with my family, and then I would go back upstairs to my office, and my wife was like, "What are you doing?" I'm like, I feel like I'm at work. So if I'm at work, I need to be working. So I would just
Yeah,
work all. She's
yeah.
like, "Work now? It's like 10 o'clock." I'm like, "But I'm at work."
You need that separation.
I need that separate. I gotta leave and go somewhere.
Right. Yeah, I dig it, man. So, Darel, I'm curious, man. Being in the business, you said you started in 2003, right, in your company. So, what was that, 13 or 17 years now,
Yep.
right? Seven. Wow. Time flies. Time flies, man. Holy smokes. We got 9/11 coming up, man. It's been almost 20 years.
Yeah.
Holy smokes.
Great.
Yeah, man. It's crazy. So I'm curious, Darel, what is one moment in your career so far since you started Noble Mortgage? One challenging, oh shit, my world is over moment that you've had, or a moment where you've had anxiety, panic, freaking out, if you've ever had one of those.
Oh, definitely. The Great Recession of 2008 was a tidal wave, that we had to do with. We went from 2003 to 2007. I don't get a lot of foreclosures. I get maybe one or two a year at the most, sometimes zero. I mean, we just don't get a lot. So probably in my first, you know, 5 years in business, I maybe had three or four foreclosures, and when you have a foreclosure, it's very time consuming and capital intensive. I've got to foreclose on this property. Then I've got to figure out what I'm going to do with this house. So I need to put money into it. I got to figure out how to sell it. So, it's not what we do as a business. We're not built to fix up houses and sell them. So we had, maybe, like I said, 1 to 0 a year. So then in 2008 hits the Great Recession. We went from, probably in a 3-year span, we probably had 40 foreclosures. Probably at least, maybe 50. I don't know. I'd have to count it. So at any given time, I was juggling 10 to 20 foreclosures at the same time. So they're not making their payments, number one. Some of them I'm fighting to get the properties foreclosed on. When I get the houses back, they're never in good shape. They always need money. So I got to figure out, put money into them. Got to figure out how to sell them. And then nobody's buying houses in 2008, 2009. The whole economy was crashed at that point. So then I've got to figure out, what do I do to generate capital? So we had to get really, really creative. So we sold what we could. If we couldn't sell them, we would rent them. If we couldn't rent them, we'd own or finance them. So any and every way we can think of to make that house cash flow. Like your hat says, cash flow is everything, right? And so we had to figure out how to make that property cash flow so we can move on to the next one. So that was a very, very challenging time. You're constantly dealing with one thing after another, with the economy not being where it needed to be. There was no jobs out there for people, so people weren't buying houses. So, I mean, I literally, you see my gray hair, Ross?
Yeah, bro.
This is not a joke. In 2008, I didn't have any gray hair at all. I was looking at pictures of my kids a couple years ago, and I was looking, it was like 2007. I was like, man, I didn't have any gray hair in 2007. And in 2008, you see like a few gray hairs. 2009, you see a few more, but man,
Yeah.
it was, I mean, I would literally get off work and go home, and I would have to like pour myself a big whiskey and just be alone for about 30 minutes just to like kind of get that edge off because I didn't want to be cranky when my God, little kids, I didn't want to be this cranky dad getting home every day. So I would just come home and be like, I need about 30 minutes to go kind of take the edge off here and have a drink and then kind of get my anxiety down. Then I could hang out with my kids for a little bit. Man, it was stressful, but very, very, very.
Wow. Holy smokes. Now, I'm curious, what method for liquidating those properties worked best for you at that time?
All of them. We had to utilize all of them. We ended up keeping about 15 houses that we rented out, and they were all in very, very rough areas, so we couldn't sell them, number one, and so we just rented them out for a while. But we owner financed several houses. We were able to fix up a couple and sell those and get our money back. So any and everything that we had to do, but we ended up keeping about 15 houses at the time. Then we eventually sold them off when the market improved. But you had to get very, very creative back then. And I tell you, there was mortgage companies going out of business every single day, and so that was stressful. Just they even created a website called the Mortgage Implodometer or something like that, and you could log on, and every day the number of mortgage companies going out of business, it was counting every single day.
No kidding.
Yeah, it was bad. And all the hard money companies that were in business back then in Houston, like 80% of them were gone. They're not in business today. So, getting through that, certainly I wouldn't want to do it again, but I'm thankful for it because it helped me really, realize, do I have what it takes to get through a period like that? And so it gave me a lot more confidence.
Man, what are your thoughts on The Big Short, that movie?
Yeah, very, very interesting. Very interesting movie. There's a lot going on there. I think, at the end of the day, the regulators really kicked back hard on the mortgage companies. But I think if you look at the statistics of it, it really wasn't the mortgage companies doing it. It all came from Wall Street. Wall Street created this big, ugly monster they were able to profit off of. And, they brought that to the mortgage companies. We want to buy these types of loans. And the mortgage companies created them, okay, you want these loans, we can bring them to you. But, they kicked back with all these Dodd-Frank regulations, which really, really make it difficult to maneuver as a mortgage company in so many different ways. And they require licensing. Now, some of it has been good, having everybody being licensed, and they do background checks on mortgage professionals now. All that's good. All that's good things. But the minute you start to tell somebody how to make a loan and what do they have to do to qualify that person for a loan, it's made it very restrictive and ends up costing the consumer more, but it was getting stupid for a while. I mean, these subprime loans started off, with good intentions, but by the time, towards the end when the market crashed, they were so ridiculous. And so you could see these loans, and I'm like, this is a foreclosure waiting to happen before you even make the loan. I wouldn't do a lot of them. I'm like, this is stupid, because my loan officers are always coming to me, hey, we need to go set up with this lender. They'll do 100% financing with a 520 credit score. And I'm like, why? Why would you do that loan?
That's something, man.
Yeah,
that's something.
Like, foreclosure waiting to happen. So yeah. I wouldn't get set up with some of those lenders that were too aggressive because I just didn't believe in the product. So, and certainly enough. So you could see the writing on the wall. I could see it happening. But yeah, that was an interesting movie.
Yeah, definitely, man, definitely. I'm curious to see, what's going to pan out with COVID and the economic impacts 2021. Definitely.
I don't think we felt it yet. My opinion on that is, there's so much free money that's been pumped into the system here the last 6 months that nobody's really felt the effects of it. Maybe the bars have and the restaurants have, but a lot of them got that PPP money, which is that SBA loan forgiven. Everybody's on unemployment, that they were making more money now than they were before. So, it's an election year. They're not going to let anybody get kicked out of their house, eviction moratoriums. People don't have to pay their mortgage if they're having trouble. So all that's going to go away at the beginning of next year. Right now it's just like get through the election, right? Because if you're going for a re-election, you're not going to let anything bad happen right now. You're going to do everything you can to pump the economy up. So next year, when all that money runs out, I think we're going to see exactly the real effects of it. And I think we'll be dealing with it for quite a while.
Yeah, I totally agree. Absolutely. Some interesting times ahead. Mm-hmm. So, Darel, before we wrap up today's episode, right now the listeners are inspired. They heard your story, what you've been all about for the last 17 years or so, and They want to know, man. What's your message? Like, what should people do? What's your message to the people, man? That want more, you know?
I think you have to be passionate. If you're not passionate, you have to find your passion and pursue it, but you also have to be good at it. I tell my kids, you got to figure out two things. You got to figure out what you like and what you're good at. And hopefully if you can find those two things, then you can make a career out of it. I've been doing this, over 20 years. You think I'd be sick of it right by now, but I love what I do for a living. I love my business. Now what I do today is vastly different than I did, even 10 years ago, as far as my function in the company. But I love it, and I'm passionate about it. I wear it on my sleeve, So if you're not passionate about it, then get out of it. Do something else, You've seen, like we talked about waiting tables. You walk into these restaurants, you see some guy there that you can just tell he doesn't want to be there.
Mm-hmm.
It's like if you're in that type of job, or if you're in that type of career, or you're own a business you don't like, get the hell out of it. Do something else. Because if you're not passionate about it, you're not going to be successful at it, And if you are passionate, chances are you will be. But you got to have a skill set too for it. You got to have a mindset for it.
I love it, brother. Great advice, man. And Darel, do you have anything that you're currently promoting, or something that you want the listeners to check out and take action on?
Yeah, we'd love to do business with anybody that's in the real estate market looking for financing. Noblemortgage.com is our website. We have all kinds of free videos on there. We specialize in working with not only seasoned investors, but newbies that are looking to get involved. So I do a lot of, now we used to do events. We used to have free happy hours and all that kind of stuff. But now we do webinars, we do virtual networking events. So if you're looking at getting involved in real estate, check out our website, go to the events page, and you'll see all kinds of things you can attend. We just had a virtual networking event this morning at 11. So we do those twice a month, and we do webinars all the time. So really believe in educating people, no charge, and hopefully they can get involved in the business.
I can't wait for those live events to come back, man.
I know, me too. I had to cancel. I kept canceling every happy hour that we're supposed to have. We just canceled them all for the rest of the year. I'm like, screw this. I'm tired of thinking about it. So hopefully next year we'll have some.
Absolutely, brother. Well, it was a pleasure to have you on, Darel. Thank you so much for sharing. Enjoy your week, man, and we'll chat again soon.
All right. Thanks, bud.